I've had my share of learning opportunities over the years.
Sure.
But, that's one of the things about doing it for so long. There's really not many scenarios I haven't come across.
Sure.
Having that length of time on the job certainly is an advantage to help navigate, a few tricky situations that might come up.
Us being in the service industry, we're trying to put an experience out there. We're trying to have the experience be informative and good and all those things. Sometimes I picture like the whitewater rafting scenario, us as the guides on the back. And sometimes if the raft's about to flip, we still have to stay in control and help everybody out. Mark Deering here from Remax. We are here with Pete Humphrey from Independent Bank. How's it going, Pete?
Good, Mark. Good to see you. Thanks for having me on.
No problem. If you're watching this video, just wanted to make sure you had a face with the name. And actually, you're about to hear the voice. I mean, hey, you got an awesome voice that people love to hear.
Oh, well, thank you, Mark. That's very flattering. You're going to make me blush. But yeah, thank you.
So Pete's been in the business for 30 years. We don't want to show our age here, but you've been in the business for quite a while. And wanted to bring you on to talk a little bit about the process and do a little intro here. But how long have you been doing it? And tell us about that.
So I started with Independent Bank in 1996.
Okay.
So this is my 30th year in residential lending. And I'm very proud of that because not very many people in my industry stay with the same employer for that length of time. So 30 years with the same bank, I think says a lot about my commitment to the career and how much I like Independent Bank. They're a great community bank, local bank. There's pretty much no product that we don't have. And so,
absolutely.
30 years.
That's awesome. That is, we have that in common. I've been with Remax for about 30 now, so we like to stick in our lane, stick with what's good, right? Stick with what's good. So talking about that a little bit, you mentioned local lender. There's all kinds of online applications people can do, but when us listing agents are on the side of getting an offer, having a local lender approval means so much. Like you guys take it above and beyond, and it's an actual approval letter.
Yeah, I think in this market too, where there's obviously competition and there's multiple offers, you need every possible strength on your side. And I think a phone call from a good, well-known local lender goes a long way. And I'm certainly willing to call the listing agent when you make the offer and say, look, here's an application from John Smith. John's got excellent credit. He's been on his job this long. He's got this much down. And that just gives the listing agent some comfort to accept your offer over somebody else's that's approved with a online lender that they don't know who it is. And there's no trust there. After 30 years in the business, I've worked with most realtors in the Grand Rapids, Rockford, West Michigan market. So.
Sure.
And most people have heard my name before.
Absolutely. And this just happened last week, and we haven't had a chance to talk about it, but we sold one in Allegan. 3 offers came in. One of the offers was very close. We started talking about the lender. You were the lender on the other side.
That's right.
So my confidence level went like this. Going to get it done. You're going to close it.
We are going to get it done. We're going to get it closed. Yeah. Well, that's just a good example of where having that local lender, is definitely a leg up as a buyer.
Absolutely. So let's speak a little bit about some construction options. So like if someone is sitting in a home, they have $100,000 equity, they are looking to build or move into a condo, they're out shopping. What type of programs do you have to where they can buy non-contingent? I know there's like a one-time refi, or what are some of those options? Yeah,
so we have the option of a free reamortization.
Okay.
So you need somebody who can write a non-contingent offer, right? Which means you don't have to sell your house first.
Sure.
Because in this competitive market, you need a non-contingent buyer to really stand a good chance, right? On most listings anyway. We have an option where down the road, they start out with a low down payment and obviously a higher a higher mortgage payment, which is not ultimately what they want, but they haven't had a chance to get their 100,000 of equity yet. So we can approve somebody with a low down payment, and then they can do a deferred down payment after the fact. So bring that 100,000 in, pay it down on the principal, and then independent bank will re-amortize that for free, which is like a loan reset. We can drop off PMI insurance and we'll lower their payment down to the new minimum payment.
Sure.
So they can end up where they want to be in the end, but it just allows them to get from point A to point B. We also have a bridge loan, which is simply accessing that equity early and using it, transferring it onto the new deal. And on a case by case, we might do a bridge loan. It just depends on the situation.
Yeah.
One other product that we have that's very helpful right now is we have a low cost refinance.
Okay.
So any buyer that buys to the end of the year will have an option of using this rate rewind refi is what we call it. And the bank waives its internal fees, which is about $1,400 of savings.
Sure.
So, rates are a little bit higher right now, and that's deterring some buyers because they see these higher rates, and obviously their starting payment is higher than they're comfortable with. Mm-hmm. But we do expect mortgage rates to come down over the next year or two. So you've got this low cost refinance at your fingertips. You can use it up to 3 years. So
sure.
You've got 3
Wow, 3 years is great.
Yeah. So, that's a good product. I don't think anyone else in town has that either.
That is a great product. That is a really good product. So I knew a little bit about it, but that really helps clear that up. So the whole thing too that we like to talk about as in residential real estate, when we were just talking about this as a team earlier today, in residential real estate, most of our clients who are working with us are buying because they got married, or they're going from their family house to the empty nester house and all those types of things. And yes, interest rates are a hot topic. We all talk about them, but we most of the time are helping people move because of life changes they've had. And let's say interest rates are 0.5% higher than they wish. Well, good news, move because you should and have to. And then we can always talk about refis later and just kind of go with what the going rate is, right?
Yeah.
If you're an investor and you're looking to time things perfectly, and there's still not even as an investor, you can't time the baby, the marriage, you can't time all of those things. So you kind of have to go.
Life gets in the way, right, of those things. And you have to move because it's the right thing to do,
exactly.
For your life, whether it's your family, whether it's your job. Yeah, there's certain reason why you just have to move.
Sure.
And you don't have a choice with where the interest rates are.
Sure.
But at least if you know that you've got this cheap refi in your back pocket. Because whenever we look at a refinance, we're always weighing up the cost of the refi versus the savings, right? And it's how quickly do I save back the costs?
Sure.
And generally speaking, when I look at a refi, I'm looking to save back the cost within a year. Okay. So if the costs on a normal refi are $3,500, well, obviously you've got to be saving $300 plus per month to save it back within a year. But with the reduced cost refi, if the costs are $1,500 or $2,000, obviously you don't have to save as much to hit the 12-month payback.
Sure. So, you just brought up another good point that's worth talking about. We don't talk about it very often, but point buy downs, is that still a thing? It certainly is.
Okay. It certainly is. I typically advise customers in a higher rate environment, which I would consider that we still are. We're in the mid 6s on a 30-year fix. If you feel like that interest rate is going to get lower over the course of the next several years, it would be a mistake to buy points down.
Sure.
Because there is a certain time period that you need to keep that mortgage in place before you start saving money, because you have to save that back each month, and it takes, most of the time when people are paying points down, I look for them to save it back within 3 years.
Okay.
So you better be sure you're going to keep that loan, or as sure as you can be. It's a gamble, right? You got to keep it for 3 years, and then after 3 years, now you start saving every month.
Sure. Makes sense.
But if rates drop and you refinance it before you hit your break even, then you've lost money by buying down. Sure. Most of the time, I recommend people to get the best 0-point quote they can.
Right.
Because plus when there's some competition between lenders, lots of times for competitive reasons, the bank might have already taken a slight loss on it already. So the cost to buy it down even further is going to be, too expensive.
Sure.
And it wouldn't make sense, because the buyback might be 5 or 6 years.
Sure.
On the point. So get the best 0 point quote. That's typically.
And everything you're talking about right now is outstanding information, and no different than the clients talking to us as real estate agents. It's like, you guys don't have to know all that and take notes on all that. We're going to walk you through that. It's like, does this make sense in this scenario? I know there's some of the bigger builders in the area. This is going back a little ways, a year or so. They were doing buy downs on their points to help, move their inventory.
Yeah, and most of the time, Mark, those were what we call a temporary buy down.
Okay.
There's 2 different types of buy downs.
Okay.
There's a buy down where you buy it down for the life of the loan.
Okay.
And that is quite a low interest rate drop, really. I mean, you might be talking about buying it down perhaps a eighth or 1/4%, but it's over the life of the loan.
Okay.
Whereas a temporary buy down is either for 1 year or for 2 years. There's 2 different types, but it is a much bigger reduction in interest rate, but for a shorter time frame.
Okay.
So there are 2 different types.
I'm learning something today.
Yeah, and most of those builder deals were a temporary buy down.
Okay.
Which basically gets you into the house, and the first 1 or 2 years you have a reduced payment.
Sure.
Yeah.
Okay, so let's touch a little bit about the construction buyer. I brought that up a little bit before. What if they're considering new construction? What should they be prepared for? I guess go over 2 options: if they need to buy a lot and then work with the builder, or if they're buying a package deal from a builder. What's the best ways that you can help them out?
Yeah, so a construction loan is a little bit more complex than a straight up mortgage. There are 2 separate phases to a construction loan. The first phase is a line of credit where the building is being done and the builder draws funds, and the customer is required to pay interest only on whatever that balance is. So as the builder keeps building, they draw more money, the balance goes up, the monthly payment goes up. And then when everything's all finished and done, there's a conversion over to an end mortgage, which is a regular mortgage payment. So it's kind of it's a 2-step process. It doesn't matter whether they buy the land prior to or whether they buy it at closing.
Sure.
Because we will do a appraisal on the finished product before it's built.
Sure.
So, but that's where they get the equity back for that land. So if they already own a $100,000 lot and their budget's $500 for the build, well, the house should appraise for $600.
Sure.
There's their $100,000 of equity for the vacant land. Generally with a construction loan, I mean, I would encourage people to try to have certainly 10% down.
Sure.
And I mean, even in a better world, 20% down. And I think most construction buyers just need to be prepared that they should have a little bit of savings behind them.
Sure.
Because you can run into some obstacles with construction loan and basically the fix is money.
Sure.
So doing a construction loan on a very tight budget, might be something where we'd really have to look into it and make sure that they're ready for it. And there's different types of construction. And there's huge custom homes, and there's also some more modest, affordable homes that we still do construction loans with.
Sure.
We can do them with as little as 5% down.
Okay.
But generally speaking, on a construction loan, it's better if you've got a little bit more.
Sure. And back to what I was saying earlier, that there's scenarios where, talking to us agents and people will start looking. We don't usually get into the buyer's finances, but after a few conversations and and after talking with you and consulting with you, we're like, hey, you can still go new construction, but you might want to buy a new construction that's already existing, so you don't have to do the lot and have the extra. So there's options there. So
and that depends on the builder.
Sure.
Some of the bigger builders offer just a straight end loan, which is just like purchasing any other house.
Right. Put a deposit down.
Yeah, you just need a mortgage at the end. Some builders require a construction loan. It just depends.
Sure. While we're chatting about stuff like this, a lot of my people my age, I don't want to say, we're probably close to the same age. Anyways, second homes, vacation homes, people looking for their place up north or whatever.
Yeah.
How are those loans looking right now?
Yeah, so we have a excellent second home, vacation home product. We use a slightly different investor than for our regular loans because during sort of the COVID period, a lot of people were buying up a lot of real estate and doing Airbnbs and that sort of stuff. And the place where we normally get most of our money from, which is the government bonded money, which is Fannie Mae, Freddie Mac, they increased the fees for second home loans.
Okay.
And quite significantly, I'm talking 0.5% interest rate higher than a primary on most situations. So we went out and found a different investor for second homes that doesn't upcharge.
Sure.
So we can get primary home pricing pretty much on a second home purchase. And the only difference really is that we require a 10% down payment. So it's 10% down, second home, priced very similar to a primary home, conventional mortgage. So we do a ton of second homes. A lot of people, most people around here at some point in their life aspire to having a cottage or a cabin or a place in Florida.
Right.
We do all those, yeah. So we've got an excellent product for second home.
That's great to hear. So Pete, that is all of the finance stuff, but let these people get to know you a little bit. I think I know that you're big into fly fishing.
Yes, I am. Yep.
Okay.
Yep. Fly fishing has been a lifelong passion for me. Very, very avid angler, and in a previous life, I was sort of a fishing bum for quite some time. I fly fished all over the world: Russia, Bolivia, Europe, Scotland. So it's been a lifelong passion for me, and I feel incredibly fortunate to live in West Michigan, because West Michigan has some of the best fly fishing in the world, really. I mean, we have some amazing rivers that flow into the big lake all the way up the coast. There's just tremendous opportunities if you like to fly fish. It's just a wonderful place to be. I originally came here to play rugby, and that was back in the 90s. And I just was lucky enough that West Michigan happened to be also a good place for fly fishing too. So absolutely love it in America. Very proud to say that I'm a citizen.
Awesome.
Proud citizen.
Hey.
I think America is a fantastic country. I still get a buzz about just being in the States.
No, that's really cool. So not only if you need a loan, call this guy, but maybe you want to go fly fishing.
Sure.
Everybody's going to call every weekend. You're going to be booked, including me.
I'll give you a lesson, Mark.
Just for fun, I just thought of this as we're sitting here. What is do you have a memory that comes up in mortgage world that, good or bad, I guess? Is there any stories that come from 30 years of mortgages? That's a tough one on the spot, but.
Yeah, that's a good question. I mean, nothing's really leaping out at me.
That means you're doing good. There's no big.
I've had my share of learning opportunities over the years.
Sure.
But that's one of the things about doing it for so long. There's really not many scenarios I haven't come across.
Sure.
So having that length of time on the job certainly is an advantage to help navigate a few tricky situations that might come up.
Sure.
But yeah, nothing really jumps out as far as a story that I can share publicly. But yeah, sometimes I picture the us being in the service industry. We're trying to put an experience out there. We're trying to have the experience be informative and good and all those things. Sometimes I picture the whitewater rafting scenario, us as the guides on the back. And sometimes if the raft's about to flip, we still have to stay in control and help everybody out. And that's where having that season, with you, with your experience levels in real estate, and if you've got a seasoned lender that knows how to navigate those curveballs that we get thrown, because it does happen, and it happens a lot, and you just have to be willing to work together as a team. I mean, it's a team approach.
Yeah, absolutely.
Right?
Absolutely. Client included.
100%.
Yeah.
Yeah. The client has to have a good attitude. Mm-hmm. They have to be willing to get us what we ask for, get it to us quickly.
Sure.
And that's, as long as everyone's willing to pull in the same direction, there's not much that we can't overcome. As long as we've got good information in the beginning and we've done a thorough pre-approval to start, we try to head off any potential issues that we see before we get there. That's
Absolutely.
the key. That's the key. And that's where the 30 years can be helpful.
Absolutely. Yeah, working with the dairying team, you're always going to get the best out there.
Thank you. I consider myself and my team. I mean, we've got a good team behind us. Whereas obviously it's not just me. There's a big team of people that put these loans together.
Absolutely.
And help out. And we're still a small local bank, which I think is nice. So I only work with one processor. We work with a couple of underwriters that do all of our loans. Humphreys loans are all underwritten by the same two. I know them personally. I can call them. We still have that personal connection. Sure. Just because we're still not that big.
Right.
We're still a community bank, and so I think that has some advantages.
Huge.
Yeah.
Absolutely.
Good.
All right, Pete. Yeah, that was great.
Yeah, pleasure, Mark.
Yes.
Really enjoyed chatting with you. Thanks.
Wanted folks to be able to meet you. They get to hear you. They get to for sure hear you.
Yeah. I look forward to chatting to some of your clients.
Awesome. Well, thank you very much.
My pleasure. Thank you.